Hello, everybody, and welcome back to the Som TV podcast. My name is Jason Wise. An amazing thing just happened. One of the largest groups of wineries up in Napa, one we've worked with many times and have some content coming, the Duckhorn portfolio, just recently sold for $1.95 billion in Napa. So we kind of have to do a little bit of an emergency podcast here. On the pod, I'm going to have Anthony Zhang from Vinovest. There's probably nobody who knows the value of wine, both perceived and actual, than him. So we're going to talk about what this sale means for wine as a whole, Napa, and the wine you are personally drinking. Before we do that, I want to tell you, right now, streaming on Som TV, is our brand new film. It just dropped, Ghosts of Napa Valley. Very proud of it. Love this one. It's a lot different than our usual ones. And if you are in Los Angeles, myself and the cast are going to be doing screenings Tuesday, the 15th, Wednesday, the 14th in North Hollywood, and then in Glendale all week. And so we'll be doing Q&As. We're pouring Smith Madrone wine from Napa on the Spring Mountain AVA. Please come. Tickets are somfilms.com. Come and say hi to us, and we'd really like to see you. Without further ado, Anthony, how are you? It's good to have you on.
Good to see you.
It's good to see you, too. You messaged me, and we messaged you. We're like, wow, about this big sale up in Napa. I mean, Was it surprising to you, or are you just sort of like, you're expecting something like this? Because I was kind of blown away.
Yeah, I think I was expecting something like this, but not this soon, because Duckhorn has been public for, I would say, a little bit over 3 years, and now it's getting taken back private, right? So that's not a long time to be a public company before an acquisition of this size and scale happens.
It's insane. Well, we should say, just for people listening, they may know what Duckhorn is, or they might know of Decoy, their other wine, but they also own Sonoma-Cutrer, Costa Brown, Goldeneye, Paradox, Calera, a whole myriad of other, luxury, and then what I would say are a little bit more approachable brands. But some of these are, I don't know, no winery likes to use the word expensive, but some of these are expensive wines. I mean, a couple $100 a bottle.
Yeah, $200+ a bottle, right, for some of those top cuvées.
Okay, so when they valued it, well, talk to me first about when they went public. Are there a lot of public companies that have portfolios like this?
So there are a few, right? Of course, we've got the Constellations of the world, and the actually a public company that recently went bankrupt was called Vintage Wine Estates. They were more in the sort of $15 to $30 a bottle range, right? But they also had a grouping of brands. But I would say that the Duckhorn portfolio is really the first of its kind to include luxury. And then if you're looking at other comps, there's LVMH, right? The king of luxury wine brands. That is a publicly traded company, but honestly, not too many others that have portfolios like this.
I'm going to ask a really stupid business question, but what's the upside? Why go public? Why would they want to do that in the first place?
Yeah, I think a few reasons to go public, but I think for Duckhorn, number one, it was getting liquidity, right? They were in a growth phase coming right off of the COVID boom. Numbers were looking good, and I think, like many wine companies, were projecting up and to the right for years and years to come. Right, so really taking advantage of the market froth, being able to get some liquidity to be able to fuel, what is, let's face it, a really, really capital intensive industry, right? For many of these wineries, their inventory, their equipment is really most of their balance sheet. They're not very cash rich companies. So the opportunity to hit a hot IPO market at an all time high when their numbers were looking great for several quarters, I don't blame them for doing it at that time.
And so what happened? You've been taking a look at their investor reports. It's all public, meaning are you an investor in Duckhorn?
I've never been an investor in Duckhorn, so I feel pretty good about providing a third-party opinion here.
So how is it going? So they go public, and it's been 3 years, which, as you said, is a pretty short time to then sell. What was going on?
So they went public in the beginning of 2021, right? That first quarter. Really started at around the $17, $18 a share range. Really peaked very soon after that. So I'd say in about a quarter, went from $17, $18 a quarter to about $25. I think that was their peak. And since then, it's been a straight road down. So ending in 2023, for example, now we're back down to that sort of $16 a share mark. And then ending 2024, now we're under $10 a share. And it's been going pretty much straight down, hitting its new rock bottoms every single month. And right before the deal was announced, that company was stock price was around $5 a share. So imagining hitting its all-time high of $25, right, around there, and then really losing 80% of its value since then.
Holy smokes. So then this company comes in, Butterfly Equity. So in the film and television business where I am, the word private equity is a very it's just this boogeyman. Everyone talks about it. Private equity comes in and then all you get are Marvel films, or all you get are the same series you've watched. And that's why Netflix looks exactly the same every show. I don't know that that's truly the case, and I could get on a soapbox, but there are some parallels here. What can you tell me about Butterfly Equity? Are they a wine company?
They're not a wine company, but they're certainly in the food and beverage space, right? They're still relatively new. The whole firm is only less than 10 years old, but the co-CEOs have come from other private equity shops. They've come from M&A, right? So it's an experienced team. They've made several large acquisitions in the food and wine space. I wouldn't say any of them have been on the luxury side, right? They've still been very mass consumer, very appealing, not budget, but I wouldn't say anything has been close to being the term luxury as I would describe most of Duckhorn's portfolio.
And I would assume everything that they have bought, they've taken private afterwards, right? Or
Mhm.
whatever yeah.
Yeah, exactly. Either public companies private or injecting money into already private companies to grow them.
What are your thoughts on a company like this with so many name brands under their umbrella? What are your thoughts on this being just temperature wise for the industry? I think it's probably important for you to say, for people who haven't listened or heard you before on the podcast, what you do, because this is where you're very qualified here. What is it that you do?
Well, I wouldn't say I'm qualified, but I certainly like to spend a lot of time in this space.
Yeah.
If qualified by number of hours in the space is a thing, then yeah, maybe we can call it that.
And you drank a lot of good wine, so you're qualified there and you're qualified in business. So what is it that you guys do?
So Vinovest, yeah, so we're a wine investment company. So we take our analysis into market trends, looking into regional analysis, producer analysis, vintage analysis, and be able to help our clients be able to pick the right wines that we think will appreciate in value. So we're not investing on the winery level or the conglomerate level like Duckhorn portfolio is, but we're on a much more micro level than that, right? We know what's selling off the shelves, what's not selling off the shelves, what's going hot at auction, what's not, and what's getting traded on that secondary market. So when it comes to luxury wine, right, that's really all we live and breathe.
The reason I ask you what you guys do is just because you're sort of on the pulse of what wine's actually worth. Meaning, because you're having to sometimes resell stuff, store it under a value. So you know what it's worth. Not the I'm going to go buy this and drink it tomorrow wine that is worth, it's just a different kind of a thing. So when I ask you about this group that has some luxury product in it, is this good or bad for the wine market that this company has been bought and that all of these brands are under one name?
Yeah, I think it's good in that I really see it as a lifeline, right? Just early this year, we saw another public company go bankrupt and have to really just dissolve all of its assets, right? We definitely don't want that for the market. I think because the Duckhorn portfolio is closer in the luxury segment with brands like Calera and Costa Brown, right? It's certainly good because it means that there's an injection of capital into being able to help these wineries get through some, let's face it, really tough times, right? We've heard about vineyards in California, these wine growers being unable to sell their fruit, right? They're saying, hey, come get it for free. As long as you can pick it up and have the labor to harvest it, I will literally give you my grapes, right? So, and these are some top vineyards that used to sell and create bottles of wine that were definitely over $100 a bottle. So I think part of this is going to be a restructuring strategy, right? Like most private equity, right? We're going to be cutting a lot of the fat, so to say. And that is going to affect maybe the consumer at the price level, but I think most likely the prices are going to stay the same. Maybe there's going to be some pricing adjustments, but it's most likely just going to affect the bottom line, right? So consumers might not even feel the difference of an acquisition like this because most of what's going to happen is operationally inside the company that's going to change.
Yeah, God, I have a lot of questions here. So if you're thinking of a luxury brand or a value-oriented, and that's different for different people, but I would say in the $14 range, somewhere in there, 14 to 20 would you consider value kind of thing?
Yeah,
10
I'd say
maybe?
under 20 is definitely value.
Under 20? Okay.
There's not many of Duckhorn's brands that I think are there. Most are still in the
the 30 to 50 kind of range, right?
Yeah. Even like a decoy, right? Which people, I think, perceive as value just because it's, related to Duckhorn, right?
Less expensive though.
Less
You can get it for
expensive.
$28 sometimes. I've seen it
Yeah.
before. Is that more resilient, a brand that's in the lower space than a luxury brand? Which one is more able to kind of weather this kind of stuff?
It's certainly the luxury brand because of the scarcity, because of the branding, right? Kosta Brown is not going to you're not going to see them on a discount site, right? Or they're going to try very, very hard not to get on those sites where they're getting offered on flash deals or things like that, right? The other ones, they may have to, right? They may have to discount 20% just to sell as a six pack. So what we really see in luxury wines is that they're really very, very resilient because there's less quantity. There's a really established price floor of buyers who know the value of Kosta Brown, right? The moment they discount it, it's going to get snapped up in the secondary market because the people who were on the aisles or were not on the wine list and were waiting to get it now have the opportunity to get it. So the pricing power of the luxury brands are really quite strong. We've seen that time and time again, even with brands, like DRC, right? Like Opus One, like Harlan, right? They really always have a price floor, and you never really see them below a certain price unless that bottle's damaged, right? Or something's wrong with the actual physical condition of the bottle.
Yeah, I only buy counterfeit wines of those ones.
There you
Because the
go.
people I drink it with, they can't tell, so it's good. No, so when I'm thinking about kind of Europe, or maybe Bordeaux is a good example. They have these en premières and they pour these wines, and then everybody sort of decides, wow, this vintage is something special. Or, and it's a weird thing to think America, we're not driven by the vintage. The cost is not what drives the vintage ever. And I'm not saying that that's totally what happens in Bordeaux. I mean, we all know that if it's from Chateau Chevalier, it's going to be expensive forever. But certain vintages are more, I mean, some of the great wines you can get them better in an off vintage. Why doesn't America do this? Why don't we have if you're in the know, that a certain year was tough and the wine might not be great, but they never admit it. They never say that. So from a pricing standpoint, like this Napa wine, instead of it being able to go up and down in price yearly, occasionally, it's always $129.99 a bottle, or $109, or it's like, I'm just asking your opinion. Like, why don't we do that?
Yeah, I think part of it is our reluctance to admit it, right? If you hear the French talk about their harvest, right, they're really bitching and moaning about it. They're like, oh, this was such a terrible vintage. This was so difficult, right? Like they're really being honest, right? And that's what's leading to them pricing them so differently, and the critics saying that. But in Napa, right, you very rarely hear about winemakers telling you really how bad a vintage was, right? They're saying like, oh, these things happened, but we're still super happy about it, right? They're always sugarcoating it. And other than the fires, which are just fully unavoidable, right? That string of 5 years we had with Napa fires, looking back at the vintage scores, they're all very, very high and consistently high. And I think also as American consumers, American wineries, we put more emphasis on the brand than to vintage, right? Like Opus One is Opus One. Do we care that much? As in the average American consumer who's going to drink an Opus One, do we care that much? Whereas like if we're drinking Bordeaux's or Burgundies or other Barolos, right? I think the average wine consumer of that particular wine is much more vintage dependent. They'd rather drink a great vintage of a good producer than a shitty vintage of a great producer.
I mean, it fascinates me in the way the market ebbs and flows and fluctuates. I mean, you can never predict something like COVID that's going to make people just drink a ton more. It happened, and everyone scaled up, and that's why we're in this position, not with just wine, but with movies too. I mean, everyone's like, oh no, there's no money in movies, or, I don't know if you're a part of any of that, but everyone's freaking out in every industry that scaled up during and right after COVID. And now we're reaping we have too much of a thing, or we don't know how to manage what we made, or, wine-wise too.
I think the prices grew too quickly, right? At least on the wine side. Many producers are under the false lens that they can still keep going up, right? We saw just the 09 Latour release, which was at an astronomical price of nearly $1,000 a bottle. And this is ex-Chateau release. People are not going to drink that when they can drink 2012 Latour for $600 or 2008 Latour for $500, right? It's just I think a lot of times the chateau are just so disconnected from the reality of the market that they're just hoping and praying that their best merchants, their best negociants will shoulder the burden. But now with so many negociants going under in the last 2 years, there's less and less of that. And these chateaus are going to be stuck as stockholders because they can't even sell through their own stock.
Man, it's fascinating. But also, too, like most of these French wine brands, if you can hang in there, some of them go back, hundreds of years, you'll eventually come through. But it's a matter of can you? And so many of these American brands are so top heavy that, I worry a bit for a place like Napa that went from farmers making, growing stone fruit and grapes and stuff like that to now they make, you can buy $800 bottles of wine in Napa very fast. I mean, we're talking basically from like 1962 until now that happened. That took, hundreds and hundreds of years in France. So it gives me some concern, I would say.
Yeah, it certainly does. And I think that's also our mentality, right? The American culture is just much more aggressive in business, in growth, in ambition, right? That's part of what makes our country awesome. But that's also, I think, the Achilles heel in a long-term industry like wine, where I think with a lot of the wine producers in Europe, where it's much more part of the family, the culture, the tradition, they're okay with not growing every single year. Many of them don't have outside shareholders, and they know that there's going to be not just a tough year, but could be a tough 5 years or 10 years. And they really know how to shrink back when they need to. Whereas with Napa, right, I think they've really invested.
You could never have a no vintage. I mean, it's like you can't
exactly
do that.
Right. Like no matter what, they're going to be pushing it to their wine club, their tasting room, building a bigger, even better tasting room, or the hospitality and the entertainment value. Part of it is a big part of the cost of any vineyard, and you don't really see that in Europe. Right. That's something I've observed just visiting different wine regions. Is some of these top wineries, they don't have a hospitality manager, an events manager, and beautiful tasting rooms. They're just taking you next to the barrel and pouring a glass, right? That's very low cost. They're running very, very efficiently. Not saying Duckhorn will become that. They're always going to have their beautiful rooms and things like that are part of the experience of being a Duckhorn member. But I think you're going to see some of that hospitality side getting cut out after this acquisition shakes out.
Do you think they're going to shed some of these other brands, this is a tough question because nobody could really answer this, but do you think they'll shed some brands to kind of even this out, maybe sell some others?
I think they'll have to, right? You definitely see a lot of trading of brands recently, especially some of the low end, right? You may want to shed some of the low end brands and only focus on the luxury portfolio. I could see that as a strategy. And there's certainly no shortage of larger conglomerates that want to snap up these lower end brands, right? Like a Constellation or a Gallo.
Before we go, I want to ask you if these kind of like big conglomerates, I would assume the supply chain is a big part of why, it's not that they just have a lot of stock and a great brand name. They have the ability to put their wine on shelves across America and probably beyond. Does it make it really hard for smaller independent producers to get their wine on shelves because of acquisitions like this in larger companies?
Yeah, I think especially on the distributor side, there's a certain minimum case size for annual productions that you need to meet to be able to even have a conversation, right? So these boutique wineries, they need to be able to go the direct-to-consumer model. They can't really rely on your traditional, on-premise restaurant or, off-premise to be able to survive and grow. That's the territory of brands like this, right? You can find Duckhorn, Decoy, most of these brands at most restaurants, most retail stores, most grocery stores, and that's the scale of it, right? That's the game. I think wineries that are more family run and boutique, they don't want to be like that, right? They want to be able to know the consumers, and they're okay with not ever becoming big enough to go public. At least that's what I think. If you take a conglomerate of those smaller family-owned brands, then you're talking, right? That's, I think, the strategy of most of these private equity companies is rolling up. Maybe they're going to be buying some more Kosta Browne level wineries, which would be very, very exciting for the industry, and seeing where they can take them to the next level.
All right, I want to put you on the spot with something here. You're allowed with a sane amount of money. I can't, I'm not going to say like you have X amount, you have $1 billion, but I want you to name 3 wineries in America you would buy to start a portfolio that are not owned by some large company. They have to be independent. Can you think of 3 right now that you would buy and be like, I'm starting the Anthony Zhang portfolio of wineries or whatever it is you would call it.
I love that. That's going to be on my vision board tomorrow.
Yeah, right. So I'll check your Pinterest. But
yeah, I'll say number one is Mayacamas. I think looking at their pricing over the last decade, 2 decades, it's always been around this just over $100, right, for a Cabernet, which I think is massively underpriced when you're looking at the other things around that range. That's number one for me. Heights, but Heights is already owned by a conglomerate now.
Heights got bought.
That would have been my number 2.
I like the Mayacamas pick, man. They're, first of all, Braden, who's a winemaker, is a very good friend. But their cabs are second to almost none. For me, for the style I like personally.
Number 2, I'd put Realm. I think
Realm. Interesting.
Yeah, they're very much so under the radar, right? The people who love them really, really love them. But not many people know of that brand, right? They're certainly luxury, certainly culty, but not at the same level of culty as the Harlans of the world or Scarecrow or Tusk, right? To me, I think they have the potential to be that, but they're not quite there yet, and they are relatively newer. So that'd be number 2 for me.
All 3 would be in Napa then, probably, right? Of your wines that you'd start this, okay?
I would say so. I mean, I think this winery just got sold, Sea Smoke. Right, if we were good.
Yeah, but aren't they in Treasury? Isn't Sea Smoke?
Yeah, that's the thing. They did just get acquired, but I think for price to quality ratio, right? Those wines are under $100. They definitely deserve to be over 100.
Isn't it scary though? I ask you this question: of the 3 wineries you'd buy to start your own company, and you struggled to name 3 because 2 of the ones you got 2,
and just in the last 4 years too. So there's certainly it's been a very acquisitive space, right?
Yeah.
So. I'll linger on that 3rd one. Maybe I'll come back to you on the next episode. But
sounds good.
It certainly is interesting in terms of how much consolidation there is in this space, especially on the high end.
I don't know why it scares me a little bit. I think one of the things I felt so deeply in love with this business world was how vast it felt and how intricate and how different all the wines were. And I feel like you lose a little bit of that with this kind of action. But, I've been terrible at business my whole life, so this is why. You lose a little bit of the I don't know. It's not individuality. It's just that everybody is sort of doing the same thing. You
lose the personality, right? I think part of the charm of these family-owned vineyards is they don't have it all together, right? They're not all super polished and giving you the same marketing message and same polished tasting experience and same sales pitch at the end of the tasting, right? I think that has been really honed in by a lot of these Napa wineries, but I think part of the charm is the clumsiness, right? Or I forgot to give you this, or they're not even going to pitch you on the way out. They don't have any of the wine that you just tried, right? So
that's right.
I'm totally there with you, right? It's not great for business, but I think it is part of why so many people fall in love and are still in love with the wine industry.
Well, we're going to have to see how this all shakes out. I just wanted to get your opinion. It's not often that anything involving wine sells for nearly $2 billion, and we publicly know that it happened.
Well, let's see if it closes too, though. So it's not a done deal yet. There's still a period in which there's a lot of approvals that need to be done. So if it does close, it'll close in the next, I think, 90 days, 180 days. So we'll see. Yeah,
it's too bad there's not still time to buy some stock at $5 or so a share right now.
Yeah, it's already popped up. It's doubled. It's doubled in the last week.
Of course it has. Well, all right, Anthony. Well, thank you for being on. Where can people who want to invest in wine and do that, where can they go?
Well, if you want to invest in Duckhorn, any stockbroker can do that. It might be a little late to the train, though. But if you want to invest on Vinovest for the up-and-coming bottles, we're at vinovest.com.
That's great. That's great. Everyone should check it out. It's a great organization. And for all of you, go to somtv.com. You can watch Anthony on a ton of stuff, but also our brand new film, Ghosts of Napa Valley, is streaming now. And if you're in Los Angeles, Santa Monica, Tuesday the 15th, North Hollywood, Wednesday the 16th, and then Glendale the whole rest of the week. We're going to be doing Q&As and all sorts of stuff. I'll be there. The cast will be there. And we're pouring wine, so come and see us. All right, somfilms.com for that. And I want to thank all of you for listening. Let's go drink something nice.